Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Let's find some music here. I think we might have an interesting day here. People freaking out over in the UK again. Come over to the chart here. I'll show you what we're talking about. Good morning, Omar. By the way, sorry I'm a little bit late here, but I decided I wanted to have an English muffin sandwich, and that took a little while. All right. So, come on over. Oh, this is a lovely song. Okay, so the 10-year yesterday took a little bit of a hit. Overnight, they were coming back up. And there was reports that the Bank of England was going to do some more quantitative easing. But then the Bank of England came out and said, no, we're not. And it took a plunge. It looks like they're recovering from that now, though. So that kind of puts us in a strange spot, doesn't it? I suspect there might be still. I've been looking for this, like, hey, maybe we can buy out of here, but I don't know, because yesterday's down move, I think hurt sentiment a little bit. Like, it was like, oh man, there's really no respite from this, is there? S&P 500 though looks awesome. Oh my gosh, and they're extending overnight. So the question was, like, could we get above 3,700 today? Looks like the answer is yes. I mean, hey, we still have to close above it, but when you have a start like that, that looks pretty good. And then we got oil. Oil's still just kind of going sideways. Biden administration saying they're going to do another SPR release. Another release from the Strategic Midterm Reserve. Yeah, I said it. And then gold and silver still kind of sideways. Silver, you know, holding its big gains from yesterday, though. That's good for silver. Kappa has not been doing very much lately, has it? I mean, there was this big move up here, but then it's just kind of been sideways. Why don't we come over here to Bitcoin? Bitcoin sideways. And the dollar. The dollar took a hit yesterday. And maybe we're headed lower again. If the dollar could continue to you know, move down, that would be good for everybody else. And I think that probably puts us back in the, you know, buying treasuries area. Well, I sure don't like the prices we're getting. It's like, hey, Seth, let's hit 3.97. You can be the only one. Well, okay, they took it. That was exactly the one that I wanted. But see, that's yeah. So what I would prefer to see is, like, if there's one lot at 3.97, I hit it. Okay. And then there's a stack on me and, you know, like, it never turns back. That's like the optimal situation, right? They're just kind of watching it. It looks like it could go. Maybe it's going to be good. Initially, it wasn't the greatest, but maybe it's, well, like, see there, it went big again. So I think what we're seeing here is kind of more just the action from the start, but there was a little bit of choppiness at the beginning. We started at what, 31? There was a little bit of choppiness at the beginning. So that's kind of where we're at. Let's come back over here and see what we got. The rise and fall of negative yielding debt from 17.8 trillion of global bonds to 1.5 trillion of Japanese securities. Lisa Abramowitz pointing a chart where it just goes up and completely back down. Mohammed A. El Arian, the speed of the decline is particularly notable, highlights the broader issue of the ongoing adjustments of a financial setup that was optimizing the combination of low rates for long, massive central bank liquidity injections and volatility suppression. Yep. Oh, yep. Okay, now they're... It's looking a little better. I'm not really a huge fan of... So nobody's hit below the 9.7 yet. There's some iceberging up there. So I think I should back off and let them sort a few things out in here if they're going to be trading volume. So I want to be in before the volume comes, not after it, right? I like to be following up volume. That's never helpful. Mohammed A. El Arain, this is from the Financial Times and illustrates the impact on UK borrowing costs of the mini-budget saga. Also points to the residual policy-related risk premium, showing that borrowing costs increased substantially. And, well, now with the Hunt statement, maybe they're coming back. Very interesting. Very interesting. I don't like this world where the UK is the most important thing, though. You know what I mean? I don't like that. Brannigan Barrett, as central banks continue with reckless policy behavior, the calls for alternative assets will grow louder. The Bank of England won't ever begin quantitative tightening, nor will the ECB, nor will the Bank of Japan. The reality is, quantitative tightening will be kicked down the road until there is a consensus agreement to, quote, make it disappear. Assets that are not directly controlled by central authority will have their day in the sun. Yes, I'm talking about Bitcoin crypto. Remember, the value of anything is derived by consensus. Oh. Piss off enough of your generation and you have consensus? No. If Bitcoin became the consensus, it would almost immediately become a disaster. And then everybody would want to get rid of it. Okay, and that's it on our Oh, there is a technical discussion on December 1st, which discusses the forecasting problems, papers, and explains my problem with P-Tetlock's super forecasters. Hopefully, P-Tetlock will come and answer some questions. Oh, I'd love to. I'd love to. December 1st? Oh, I'm part of that group, aren't I? The Global Incierto Reading Club. Incerto? Not Incierto. Incerto. Yes, I am a member. I am a member. Don't you guys want to watch that? I think I need to. Okay, so I'm going to attend. Yay, we're going. All right. You can go on Taleb's Twitter if you want the link. Dun, 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 dun. Okay. Financial Times tweets Chancellor Jeremy Hunt says he is not making any commitments on the pension triple lock just weeks after his predecessor Kwasari Kwarteng reiterated the government's commitment to this safeguard. Pension triple lock, what is that? I'm gonna look that one up. What is the pension triple lock? The state pension triple lock is a rule that means the state pension must rise each year in line with the highest of three possible figures: inflation, average earnings of 2.5%, or something else. What's the other thing? That was not the best one to look at. Unbiased.co.uk. Okay. Average earnings prices as measured by the Consumers Prices Index, or 2.5%. Oh, okay. Yeah, I could see why that would be a problem. Oh, somebody traded at 6368 now. It still looks locked to me, but it also looks like if it is a buy, they're probably not going to give us better prices than this. A little frustrating. Especially there's some liquidity there at O2 that wow, Rolls-Royce unveils its $350,000 Spectra luxury electric vehicle. Looks kind of cool. Isn't this calming? Love it. The dollar is still under pressure here. Okay, the Bank of England just made a statement of some sort, but it was on something that I did not understand at all. We did just see a little bit of a move up there in the treasury, so. It's because I put my order in. It's because I put a limit order in. That's what happened. Oh my gosh. Okay, so do you guys see this story about, well, not story, but like the other day, Joe Biden was like, the American economy is strong or something like that. He did the thing that like he should never do, which is like say the economy is strong when it's looking bad. And he was eating ice cream, right? Anyways, that's not important. The important thing is that it happened. And now every time that I see a politician with a microphone, I think that it's an ice cream cone. You see this? Look at this girl. She's got this lady. It looks like an ice cream cone to me. Just some flavor for the morning for you to make you want some ice cream. I like that breakout higher, but like they busted those guys at 03 and then there's no follow through. I think my issue here is I kind of want to go along with it, but I'm a little nervous about what happened yesterday, because yesterday it was like it was looking good, and then like starting from like the equities open, almost it seemed like it was just nothing but down the whole day, you know? So you know, we see a little bit of upside now and I get suspicious of it. Carl Quintilla tweets, quotes Bloomberg, and who is quoting Blinken. China has made a decision to seize Taiwan in a much faster timeline than previously thought, Secretary of State Anthony Blinken said on Monday, shortly after China's leader reiterated his intent to take the island by force if necessary. You know, see, that's exactly what I was worried about. Jeez. And 1500 at 02. Okay. So let's just kind of sit here, and I'm still seeing these, you know, comments from the Bank of England, is what's kind of got me on edge here a little bit. I don't understand why you would want to go and invade a country where you're not wanted, you know? Like, if your intention is to go and take out some maniacal dictator And then, but then, you know, the country is still going to be a country. You leave them to, like what happened with Germany, right? Okay, fine. That's cool. We understand sometimes that needs to happen in rare circumstances, okay? But this whole thing like, oh, there's this area of land, they don't want to be governed by us, but we're going to make them be governed by us by force. Why would you want to do that? It's such a dumb idea. It is such a dumb idea in this modern world. Yeah, it has some strategic significance to you. I guarantee you that it's the people not wanting you there is worse than whatever strategic advantage you gain from it. Well, that definitely looks like a false breakout there, and there was some selling on the way down too. I think it might behoove us to go the other way here. Yeah. It's already going to be too late, probably. Yeah. That does not look good. Already missed probably the best entry. Oh, that's not how I wanted that to turn out. Oh well. Yeah, and of course it almost immediately flips. You know, that almost makes me want to just like quit right now. That was a really bad fill. Really did not like that. I think a lot of this is just luck of the draw, but that one was particularly bad. And I probably shouldn't have, you know, I think I was a little bit too hasty. Let's clear this stuff below us so that we can kind of get a better idea of where we're at. Jeez. Germany Chancellor Scholz has been decided that 3 nuclear power plants will remain operational until April, and my decision brings clarity. This will get us safely through winter. Good for them. If only we could convince them to build more. Oh well. Papyrus IQ. China's junk debt is sliding deeper into unprecedented distress. So we had a little bit of like a hole open up below us after that failed breakout to the upside, and then a little bit of an impulse up, and now selling back down. It doesn't look like the amount of volume on that market volume to it was very much, so it looks like that liquidity down to at maybe 111 even is just a little bit soft. But it remains to be seen whether there is a meta order that's going to sell us down through to the bottom of the day's range or not. It's still being pretty like non-committal here. The volume, that is. And I'm also not really seeing signs of like liquidity distress, or should we call it? Or like a liquidity hole. Like when they're ticking, the bids and offers are pretty firm behind the tick. So it seems like both bids and offers are more than willing to follow the price for the fills. Not only that, but like when they start hitting it, it's not pulling, right? I mean, it's done that on the offer too, but so there you see, ticks down, 600 offered, right? Then we'll see if some trades into it, does it like all pull? Now, 246 isn't as much as we would like, but it's not directly pulling. That one looked kind of more like that. The other two didn't really move. Credit Suisse taps RBC and Morgan Stanley on possible capital hike. Capital hike? Does that mean like fundraising? 3,800 resistance in the S&P 500? Is that what you're talking about? Well, that's a long ways away to be worrying about right now, isn't it? Could be on the open. Maybe in 30 minutes it could matter, huh? Well, they've kind of gravitated back towards O2. So there's probably your optimal entry. Such the optimal entry. I think on the micros here, your entry is a little bit of luck, and I just got unlucky today. Since the initial move down, I would say the volume has been non-committal, but the treasuries still seem a little bit heavy. Like there are quite a few ticks down that seem to happen just a little too easily. Okay. Not as much liquidity being put up at O2 half. Seems like the spread is still steepening this morning too. Come back over here to my longer term chart here. Has it been, well, it's been steepening for the last like 3 days, but not like, yeah, it's like it'll steepen very, very gradually. Then you get days like October 13th, last Thursday, where it just like CPI, where it just flattens out insane. And then it starts steepening again. What about the dollar? The dollar is kind of... Oh, okay, there was a big spike in the Japanese yen earlier today that I didn't notice. That kind of triggered the change that we've had here. Well, I think that this is not working out. The volume here in the 10 years seems to have dried up all of a sudden. You gonna give it another tick down? Come on. No. What are your favorite futures tickers? We mostly trade ZN. ZN or the micro yields. Okay. Micro Maker realized they were gonna have to fill us there, so they did it. Okay, so a little bit of move down there. Volume's still kind of iffy. Things look pretty heavily correlated with the 6J. So I don't think that I want to be getting back in until I understand what the 6J is doing here a little bit better. So I think that entry that I got was pretty not very good. So now I may have just gotten out at like exactly the wrong time. It seems to do that to me a lot, but I wanted to see that one going. So I need to go on here into the back into the 6J, and where's my little, didn't I make an inverse indicator? I need something like inverse, where is it? A little bit more downturn. Come on. Oh, I'm gonna find you. I'm gonna find you. All right, bro. Thanks. Cool. Yeah. You wanna go and find an instrument that you have an advantage in. So wouldn't just go like, okay, what's a cool ticker, and just do that. I would go and look at like, what is the commodity or thing that I have the most interest in and the strongest ability to come in and, you know something about it and use that to my advantage is what you want. Okay, date modified. Let's switch that. Really? Did I not actually make it then? Darn. What's with that? I swear on my life I made that. I guess I'll make it a speculator set, the free one. New indicator. SPSF inverse. Value of 0 equals hold on a second. I want to look here on, like, when I do an SMA, they don't use input 0. Come on. No, that's not working. What? How could I screw up something that simple? How did I screw up something that simple? Oh, look, it's coming back up. I'm glad I'm out. I'm glad I'm out. You know what? You know what, ZN? You can just be like that. I don't have to play that game. Try it like that instead of input. Oh, I see why it's doing that. Let's try that. Back down, That sure happened quickly. Can't do it on bar 1 either. That's weird. Sometimes I feel like I could trade oil, maybe. Yeah, you're not the first one to say that to themselves. No, it's easier said than done, but I know how it reacts to news. Oh well, that's good. I mean, like I think that if you're gonna trade oil, right, you want to know something about the oil industry. Okay, what the hell is going on here? Is it just not like... There's our move. Okay. I'm gonna have to do this off stream because I would need to debug it, and I don't have time to do that at the moment. But that's kind of weird that it's giving me like outside of the bounds of the array sort of a thing on like the most simple data series you can have. You do 4x. I can't recommend 4x. Sorry. I just can't recommend 4x. I swear there's got to be, or maybe there was there was something built in for the inverse, so that, and I forgot about it, but I could have sworn that I had something already worked out there for that. So we did get like the move down. That did have some volume behind it in the 30-year. So I guess I could have just been more patient with that initial trade, but I don't know if it really was worth the stress, to be honest with you. But let's see. It kind of looks like they're starting a more extensive sell. There's some liquidity at 25 in the 5-year that they'll have to overcome. This is really bothering me now. How can I be doing close of 1 and it's not giving me a value? That doesn't make any sense. On the bar close. That really doesn't make any sense. I'm trying to figure out if that pullback is within parameters. What's happening is I'm paying up $5 for it, and then it comes back, it settles back, and you come unchanged. Yeah, I don't know if all of this action makes much sense, guys. Yeah, was it a fake out? Well, no, I don't think it was a fake out. I think there was a sell in the 30-year and it just subsided really quickly. And then they kind of slipped back into the hole. So that might have been like an impulsive move in ZB. Like maybe it was news. Maybe it was somebody stopping out. But the market maker is definitely like pushing it up. Yeah. Like seeing it now at 0.3 is a little bit disconcerting. But I think I made a mistake there because I've been expecting this to just like start a trend and just go, kind of like it did yesterday. And it doesn't seem like it's in that mode. Like yesterday, it trended a little bit, but it was kind of iffy. It was kind of slow and tricky. Today, it's not really trending at all, and it's just being tricky. So that expectation that they got there at the low and that they're gonna start trading down now was maybe a really big leap on my part. But at the same time, it could be that there is a metal order selling coming in here, and he sold a bunch at the beginning and then like completely backed off, knowing that it would spike back up like that. You know what I mean? Something, it definitely feels a little fishy though, doesn't it, Mr. Bond? It definitely feels a little fishy. You know, another thing is that the liquidity in this market just isn't very good, right? It's just very, very easy for it to move a basis point. I don't know. The sellers kind of have an opportunity there to slam it back down, and they're not taking it. Does anybody even trade into O2? Well, the 10-year ticked down, and then the 5 and the 30 didn't, so that might be part of it. Okay, someone finally did it. Oh, and that almost immediately they cleared it too. That's funny. I don't know. Not sure if you can make anything from that or not. The 30-year is still like a little bit reluctant to sell again, it seems. Like it seems to me that you had this move down that maybe upset the market makers a little bit, and they decided to not honor any offers all the way back up. And now they're kind of chilling there and not really reluctant to come back down because of that. Surprised we're almost at 3,800 again. Why are you guys all? It's like 40 points away. That's just how volatile the S&P 500 is right now? Is that 30 points is like a sneeze? just a little bit away. Oh, we're gonna have industrial production month over month here. Tomorrow we get Philly Fed. That's like those are the most significant news events we have this week. Industrial production is usually not a very... But we're expecting industrial production month over month to be spot 1 versus a previous reading of negative spot 2. That one's actually probably likely to come in a little bit under expectation, but I don't know if that's really going to matter to what the treasuries are doing here. I think that what matters to the treasury more is like if people in the UK are selling it or not. I suspect that the selling that we had yesterday was maybe from the UK. Okay, so a little bit more active selling at 0.5, but it's not going. Well, they were maybe kind of testing it there. I guess it is kind of funny that yesterday I was saying, well, they just need to hold 3,700 and that would be like a really good victory. Not saying it means anything predictive about where we go from there, but just like it would be a significant victory. And we're already talking about, will we close above 3,800 today? Jeez. Jeez, guys. It seems like the 30-year is in control here. The thing that I see with the equity markets in particular is that the equity markets are trading into really big extremes very quickly. So like on Thursday, it was kind of like it was a sell and then a buy back up, and it was like, okay, then maybe that makes sense because of options. Okay, but then on Friday they sold, and it was like all of the hedge funds just like went crazy short. And so, of course, on Monday, you're going to have like a rise back up. And when you have options expiration this Friday and everything, you know, I think that you might see it go from oversold to overbought to oversold again this week. You know what I mean? Oh, they had an open house Chicago event this weekend? I missed out. I totally would have been like even willing to travel to Chicago for something like that. So I want to see that. I want to see it. I want to see it. Oh, that's not the real trading floor. Do people think that the S&P is going to rally through weak earnings and no Fed pivot? No, I don't. I don't think that anybody thinks anything of the sort. I think that it's just positionings are too extreme, right? There probably are So, well, that's kind of weird. The liquidity in the micro 10 is not bidding. Maybe it's because they're pulling for the industrial production. Well, so they could be, the moves could be driven by positioning from options. They could be unwinding hedges. I think that people underestimate the amount of money that just comes into the market, you know, like from index funds and so forth. They have to buy at some point, you know. So there can be all sorts of reasons that drive us like that, right? So that's where it's like, can you explain how gamma? I have a really great video about that. It's called How to Take Advantage of Gamma Hedging. But the basic gist of it is that when an options market maker takes a position in an option, they will buy or sell the stock to hedge that position, so that they're just making money off of the mispricing in the option rather than on the volatility of the market, right? And there can be situations where as price moves, hold on a second. Okay, so industrial production month over month was spot 4 versus spot 1, and that's probably what's driving the treasuries down here at the moment. Okay, so what happens is that the price of your option changes as the price moves down, but the rate at which it changes also changes as you move down. And that requires them to buy or sell more stock to keep themselves hedged, appropriately hedged, as the gamma component changes. So that can lead to some situations where, you know, like for instance, last Friday, all of these options were taken to hedge their positions about CPI. And when it was all over, they closed those positions, and then all of the market makers had to buy stocks as the positions unwound. And so you got that massive rally on Thursday, right? And then the hedge funds came in and sold it again. What's happening at the beginning of this week is probably more of a short squeeze, but yeah, that's basically so we're talking about predictors of order flow that aren't necessarily in line with the fundamentals, essentially, right? Because does anybody think that earnings are going to be good? I haven't heard a good word about earnings at all this year. You know, is anybody bullish at all? Well, that's exactly why it moves up. But that doesn't mean that it's going to be like the bottom is in. It just means we get like these short-term gasps for air higher because the market gets overpositioned, right? Like you can't have everybody sell, because if everybody sells, who's going to buy it? Then you can't do transactions anymore. It'll go down until they can't facilitate transactions anymore, and then it's going to start coming up, and people will close their positions, and it rockets higher. Well, the treasuries definitely feel like they're rolling over, but we'll see how far they actually get. By the way, wasn't Goldman Sachs supposed to have done their earnings today? But maybe they did it after the market. Oh, okay. Goldman CEO David Solomon says there's a good chance of a recession, and it's time to be cautious. Goldman shares jump after topping analysts' expectations on strong bond trading results. That's right, folks. They got the best. They do. How long should I expect to wait to hear from NinjaTrader after completing a wire transfer to fund my account? It kind of depends, but usually it shouldn't be more than 2 days. So if you sent it before 4 o'clock Eastern time, then it should probably be there before the end of the next business day. And if you did it later in the day, you might need an extra day. Unless, like, you're outside the US or something like that. So they hedge every time the stock moves or just in response to news events. So there's the initial position, right? So say I'm the market maker and you're buying an option and you come in and you buy puts, right? So you come and you buy puts. I'm going to come and sell the stock to hedge myself, right? Then that's like the initial position. But then the stock keeps moving down and the gamma increases, then I need to sell even more stock, right? I need to sell even more stock. And then you come in, you close your position, you close the put. Well, now I need to go and buy back the stock, right? I need to go and buy 100 shares of stock back and what was hedged as well. And that will move it back up. You did it through the client portal ACH, it's typically available the next day. Yeah, I mean, the fact that he had to do it with a wired transfer kind of suggests to me that it might be more than a day or two. Yeah. Because he's from another country or something like that. Outside of the US, that is. Things really are a little bit more simple to trade on, at least on the CME, if you're if you're from the US, right? Some countries have crazy restrictions on futures, man. Down. Well, there's a little bit of a pullback. They're coming back down to the bottom of this. It's still kind of like what I've been saying though. Like the volume is a little bit iffy. Actually, in the 10-year, the cumulative delta has actually risen here slightly since that news. But overall, I'd say the volume is still pretty iffy today, and price looks heavy. So I want to know more. Maybe I can go to Zero Hedge. Zero Hedge usually has a thing when Goldman does their earnings, because I don't know. There's a guy that runs them has like an obsession with them. No, nothing. That's getting interesting. I don't want to look at Bloomberg. Bloomberg.com. Wow. What I was going wow at was crypto gaming startup Stardust raises 30 million despite slump. Well, that just says to me that there really still is too much money in the system. This is right. Oh, I'm not getting anything. They had like a great story about Goldman 2 days ago, so you would think that they would have the stuff about the analysis of their earnings, but I'm not seeing that. Pretty good pushback there. Oh, September. Oh, that was a month ago. Okay, here we go. Goldman Sachs Group's traders once again helped rescue results from a sharp downturn in investment banking, just as the firm prepares for a reorganization that will combine the two business units. The trading operation posted $6.2 billion in the third quarter revenue, an 11% increase that was better than analysts had forecast. That's actually like really, really good. Fixed income led the gains, according to Statement Tuesday that showed a 43% profit plunge. Goldman was the last major U.S. bank to post results in a quarter that has highlighted the resilience of the U.S. consumer. Blah, 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 blah. Bunch of other stuff that I like already knew. And they were up today, right? I can check at the end of the day and see how they did. I don't really need to worry about it right now. Right now, these treasuries are moving back up. For no reason. Well, the 10-year is buying. It's kind of felt lately like the treasury market is like on a mission to piss me off. You know what I mean? For a long time, it seemed like every time I took a trade, like it just went. And now it's like every time I take a trade, it's kind of iffy. It goes around and then it goes the wrong way. And I'm like, even if I'm like sticking with it and trying to get like a better exit or something, it never really gives it. It's, you know, like it feels like it's trading against you. It's really been like the last 3 trading days. It's been kind of like that. Although I have this month taken more longs than probably I should. Wow. That was a good downtick. We'll see. By the way, Uzi, how have you been? I haven't talked to you in a few weeks. Has it been a few weeks? I don't know. It's been a while. Were you okay after the hurricane? It's not too much damage after the hurricane? It's been pre-hurricane since we've heard from you, hasn't it? The top story on Zero Hedge right now is first images of a blown up Nord Stream reveals 50-meter missing section of pipeline. Been good. Been here. No sweat after the hurricane. I made a lake in my yard for 2 days, but that was really it. Oh, good. Very good. Japanese FX intervention fails again as yen plunge continues is their story on Zero Hedge. Spent the week after gathering wood from people's debris pile. Like for firewood? You turn around and sell it to Europe? You know, just enough time for it to dry out to be used for firewood. Probably not very good firewood. Let's read this story about intervention. Japanese Prime Minister Fumio Kishida stepped up the rhetoric against the weakening yen, daring traders to test him with threats of policymaker willingness to step into markets. They did test him, and it appears pretty clear that Tokyo stepped in, though had not admitted, and then the yen kept tumbling further. That is strike 3 for yen intervention. Strike 2 was just last week. Yep. He's right. It's like, well, I don't think that we're lower than they stepped in, but it is like there will be an intervention and they almost immediately sell it back down. The rain was nuts though. The St. John's is super flooded. Ooh. Central Florida. Oh, okay. You're more central. Fire pit ammunition for the few sub 50 sub 50 Gs. It must be really nice during the winter over there, huh? You know, Utah, there's like this 1 week in the spring and 1 week in the autumn where it's nice, and then the rest of the time it's always either too hot or too cold. And that's how I feel it goes in Utah. You know what the problem is? I'm not skiing. Here's the S&P 500 open. I used to ski a lot, and I haven't skied in decades now. And I would probably be a happier person about the weather in Utah if I skied regularly. Okay. So the 30-year back down to the bottom of this. I'm still kind of detecting a hint of steepening on all of this. So it kind of looks like the 30-year is going to lead the way and drag them lower. We don't get super cold, but just enough for a little fire to be comfy. I don't know if I would enjoy it like just randomly raining every day during the summer though. What's this? Somebody promised somebody missiles. Iran has promised Russia more drones and missiles. Iranian sources tell Reuters. Okay, well. By the way, Treasury is going this time without the Japanese yen. It ain't like the Florida memes in Central Florida. More like that in Miami and down south. Rain in Central is pretty predictable. Yeah, okay. Well, I'm you know, my only experience with Florida was going to Disney World. But that's the way it was. Is it was like there'd just be a random thunderstorm at 2 o'clock in the afternoon for like 10 minutes, and then it would all clear up again. More often than not, you think you're gonna get it, and it's been so dry here in Utah, though. I really hope that we get some snow this winter, because if we get another really dry winter, oh man, I'm telling you, at some point it turns into Mad Max over here in the West. I'm telling you. The Californians will build an army and they'll come up and start taking out, Utah and Colorado. It's gonna happen. That's why we need the rain. So whoever it is that's manipulating the world's weather to make it so dry, I think you should stop. I think you should stop, because we don't want Mad Max. We need a warm. Yeah, they do. Yeah, you do. We need a warm winter in Europe. Please wait until next with the cold winters. No, I'm not saying it should be cold. I'm just saying it should be wet. I want a wet winter. We need a wet winter, not a cold one. Yes, you're right. Cold winter would be very, very bad. No, you know what they say? They say that they've got it taken care of this year. The Europeans, like the price of gas is all stabilized and everything, because they've procured enough gas from the US and other things. And heck, I might even be okay next year. A year after that, though, then I'm like really worried. Trading floor audio tweets, "Oh no, Joe, U.S. GOP seizes momentum in the battle for U.S. Congress." As The Hill, U.S. Democrats worry they peaked too soon ahead of the midterms. You know what? This is kind of funny that some news outlets are like only picking up on this now, because this has kind of been the thing for like the last like 3 weeks, right? Is like we've been saying, well, there is like a rise in the polls for Democrats, but it's probably not going to last. Oh well. Better next election season. You know what the problem with this though? Because like the politics does matter to markets, right? It's just that what are the political consequences of Republicans doing really well? There aren't any. It just means that like nothing's gonna happen for 2 years. Right? It just means nothing's gonna happen for 2 years. And we're still gonna have to put up with GOP primary season with it. It's starting to feel like Donald Trump is going to run again. Normally I'm really excited about the politics. I should be really excited about that because there should be so much to analyze and it should be so fun, but I'm kind of not looking forward to it. I'm kind of not looking forward to it. You know, we got a pretty good move down, but it looks like that they've kind of settled into a hole at 31 here. And there have been like some impulses, but you see that they're not able to get out of the hole. Like a buying impulse has come in and then they settled back into it. What data do you use? I am currently using Rhythmic. And I do prefer Rhythmic. I was using CQG for a while and I didn't like it. But the main reason I like Rhythmic is because, well, one, because you get all of the levels, but two, because you can connect the Rhythmic Trader Pro to multiple applications at the same time. I really like that feature. Okay, so I'm kind of getting a hint of something happening here. I don't know if that's like a signal for me to go the other way, but I am a little nervous about the Japanese yen here. Kind of why I didn't give it more room to breathe. This guy been kind of giving me that look like we can be as volatile as you need us to be. Or as we need to be to screw you over, I guess you could say. Hmm. I am seeing a little bit of position shuffling around here. If we continue to move up, there's that 1857 at 03. And there's a big order up there at the top in the 5-year that's kind of moving around. That's interesting. Still kind of getting a bit of stuff both ways here. So once again, poor entry. It just does seem like something's going on in the 6J, like that they're going to try and make a push up here. I do kind of wonder, like the Japanese yen, it's like you come in and you do intervention. If you just do like one little spurt of buying, then like who effing cares, right? Like it needs to be more extensive than that. So why wouldn't they still be coming in and buying right now? You know what I mean? So if you want to use rhythmic data, you have to use somebody other than NinjaTrader now. So my broker is right now is EdgeClear, using EdgeClear with rhythmic data, and I'm just using the demo version of NinjaTrader that still allows me to connect with rhythmic data in order to do all that stuff, which kind of sucks because it means I can't use my NinjaTrader license, but oh well. That makes sense. I have a video about it, like rhythmic versus CQG data, where I kind of talk about it. But yeah, if you want to use NinjaTrader as your broker, you're just going to use CQG data. And I prefer the rhythmic data, but you know what? It's like, it's not that drastically different. So. Yeah. They're trying there. I don't know about this. Oh, that's weird. Whoa. Wait, what? Is that real? What the fuck? Okay, so I'm looking over here in my 5-year, and it's like all of a sudden you see how there's like the little oh, hold on. Okay. Woman saying they're not seeking retail customers on a mass scale anymore. I think he's doing his conference call. Anyways, so do you see how the histogram here in the 5-year is changing a lot? Like, what's going on? There must be a big order above us, because like 700 is the biggest slot I can see, and it shows up as tiny. So I scroll up to the top, and all the way up at 107.025, there is a 6,200 lot. I don't think I've ever seen anything even remotely close to that in the 5-year, have I? What do you think, guys? Am I wigging out for no reason? That's a massive order. It's really far away, but like, that's a massive order. Okay, here we go. Now Zero Hedge has my Goldman analysis. Oh, they're hitting into 0.2.5. We'll see if we get a collision at 0.3. They're kind of doing this consolidation into it, it looks like. So I think the market maker may be preparing themselves to have to take it. No, I guess markets isn't going away. Oh, there you go. Not clearing it yet, but 800 of it traded. Excuse me. It's too dry in Utah. The problem. Wait, Colgate is a stock? I thought that they were part of somebody else. CNBC now tweeting that Dan Loeb's third point builds a stake in Colgate, sees value in pet food business in potential spinoff. That's okay. Don't you think it would be exciting to live in the world where you can spin off a pet food business? Sounds like an exciting business opportunity, yeah? It's actually exactly the kind of business I think I'd like to be involved in. Boring AF? Yes, please. Okay, so they traded a little bit into 0.3, but they didn't clear it, and the few ticks down now. Hmm. EU Energy Chief Simon, we cannot rule out a real gas supply crisis. Yeah. Okay. That's what it is. The Bank of Japan, they need to go talk to the block traders at Goldman or something like that, and get some trading tips. Get some trading tips so that their intervention is more impactful, because it just comes back so quickly. Okay. Uptick. Let's see this. I don't think this volume at 03, half and 04 is just gonna pull. We'll see, but I suspect that we will have to trade through it. And the thing that concerns me at the moment is that if there is real desire to buy here by some large meta order of some sort, which the way that it's behaving does kind of suggest to me that that could be the case. I would think that they would be more than willing to trade through them here. You would want to trade into 03 half, 04, maybe 04 half, and then back off, let it sell at 03 half, and then you should be able to get tons more off at 03 half. But instead, it's kind of being chill here. Maybe they think that they can get it all out down here. I don't know. Actually, the Bank of Japan everyone. Okay, so then I obviously don't know what I'm talking about, right? Explain to me, Akshay, if you were the Bank of Japan, would you do anything differently than what they've done? Because the thing that I'm looking at here is like, you can see here, there's like a big spike. They came in and they defended. There was a big spike. Okay, but then that's it. That's all you're gonna do? Like, if I'm a trader, like, I think that what they want to do is like shock and awe, like make any trader out there be terrified to try and go short. You know? Well, I think their objective is to defend the yen's price and prevent it from declining further. Ouch. Look at that. Now he's playing games with us. So we started to get through some of those higher prices, and then there was a downtick in a fairly large stack at 02 half. So this is like hyper speculative. I think the intention of that is to scare people into going short, right? In my whole memory, they have said that they want the yen to be stable, and yet they go out and weaken it. Yeah. Well, so answer me this. What would happen if they went out and raised rates a little bit? Would them raising rates a little bit just absolutely crush the Japanese economy that badly? Because it kind of seems to me like as long as the Federal Reserve is raising rates that they're hosed. They don't want a stronger yen. Their manufacturing is hollowing out. Okay, so then they don't want the yen to decline too quickly then? Is that what it is? They do want it to decline, just not too quickly? Here's what I want. I want them to come in and buy TF out of the Japanese yen so the treasuries move up. That's what I want. Like if they took a trade, like I'm just saying, if your objective here is to make the dollar yen, the 6J move up, if they want the 6J to move up and continue moving up here, you need more than just one big buy all in at once in one spot. And you can't just do it in the middle of the night. You need to do it like when we're all sitting here watching it and make it have effect on the global markets to be like, oh, wow. Yeah, you really don't want to trade against the Bank of Japan, right? Because the way that it looks right now is kind of like, well, they did the thing. I can kind of hold on. It's going to come back to it here, and my short will continue to work. You know. But maybe I'm making some assumptions about what they're actually trying to do and stuff, and how they're actually doing it. I don't know. S&P 500 has been a lot slower this morning. Did eventually roll over, but we're getting a bit of a bounce now. Well, that big stack and everything that we had, we traded back up into those prices, right? And it's not there anymore. So now that you can see the whole thing play out, it really looks like, yeah, that sell was intended to scare people. It was intended to scare people into selling so that he could get filled long, huh? Maybe. I guess we'll see if they breach 04. If they do breach 04, you might see a little bit of chaos. I mean, they were terrifying a decade ago, but when you are still the same after a decade with others getting stronger, you're not so terrifying. Yeah. Oh man, and then it just gets slammed down. Come on. Yeah, whoever it was that did that just pushed it down there just because I said, hey, maybe we're gonna go to the high. That there was some selling in the 30-year off of that. Shit. I'm kind of wondering if it's really actually going to go anywhere. Look at this. So, on that tick up, there was a lot of reshuffling on the DOM, especially in the 5-year. Well, once again, as soon as I puke, it comes back to me, huh? Not my best trading. I don't think it's quite so much me as it is just this being a difficult market. That sure suggests that there's some and let's see. Like if they breach this after all that. Okay. Let's go. Let's go. When I look at that, I'm kind of like, well, you're really gonna like sell 500 and then buy 500, etc., etc. That's like what it looks like they had to do to make all of that happen, and then breach the highs. But I guess in this kind of market, like that would make sense. But I'm gonna say that was spoofing. I don't know if that's like a case that like you would ever see prosecuted or anything, but I think that there was maybe some spoofing on that. Somebody was manipulating the markets trying to get some fills long. Now, whether or not there's going to be like a further push further, I guess we'll see. So far, the breach of the highs hasn't been too encouraging to me, to be honest with you. Also, could be a spread trade because I am seeing like a lot of buying in the 10-year and there was a pretty big sell in the 30-year. To see the spreading, I'm just noticing the cumulative deltas between the two instruments. So overall, the trend has been steeper on our spread indicators that I offer through speculatorseth.com. But then I have cumulative delta on the 30-year and the 10-year, etc. Actually, I need to show you over here, right? So here, this line at the bottom is the spread. It's going, largely up. But then you can see there was this little, there was a sell in the 30-year and there was a buy in the 10-year. So they put on a steepener. Now a steepener would suggest up, but they could still make money if like the 30-year got crushed here or something like that, right? So that might also explain why some of our positions in the 10-year have been a little bit frustrating, because if they're spreading, they're selling the ZB side of the spread, then that means that our position when we're trying to go short rates is not going to go as well. Something wrong with TN at the moment? By the way, actually, did you see the new proposal from the CME to change the basket in ZN? They're basically saying that, like, because the average expected is like 6%, they're like, okay, if you go above 6%, then the cheapest to deliver is always the longest one, and vice versa when you're underneath of it. And so they said, we're just going to limit it so that the maturities are between 6 and 7 years. So now it's really not even a 10-year anymore. is the proposal from the CME right now. It is kind of feeling like, well, so we have like overnight highs is kind of acting as resistance, it seems. I don't know if it's resistance so much as it is like, I'm not seeing a real strong flood of volume to really push through the liquidity that we have up there. Because I don't think that the liquidity above us is insurmountable. That sounds great. I mean, it probably is better for people overall, right? It probably is better for the market overall. I just think it's effing hilarious, right? They really should just rename it to the 7-year. S&P 500 doing okay here, still kind of crawling back. Yeah, I can't remember where I saw it. It was like one of the guys I follow on LinkedIn that works at the CME that posted the proposal. There was like a white paper about it or something like that. Originally, ZN and ZB were 5 to 15 and 15 to 25 years. Idea being they will trade around the middle value. They were called notes, futures, and bond futures. It's kind of weird how it's come out like that, right? But I mean, that's the nice thing about the micros is that they really are truly 5, 10, 30s. How useful that actually is, I don't know. What? Look at that. There's some fight in this volume, man. And then the 30-year taking a tick down there. Well, I assume that part of the reason why they're making that change now is because if you really want one that's a 10-year, you can do TN, right? Then when the Treasury stopped issuing 20-year bond, they dropped CN down to only 10. Oh, really? I didn't know that. I'm still sitting here waiting for the 50-year bond futures. Someday, maybe, or 100-year bond futures. Actually, it tells me that it's probably not going to happen, but I thought it sure would be fun, wouldn't it? It sure would be fun. Yeah, that's what I've been telling you for a while. TN has pretty much taken over the 10-year point. Yeah, but it hasn't taken it over in volume, really, has it? I mean, if TN starts trading more volume, then maybe we switch, but... Do you look at world bond markets at all, or just us? If I had access to them, I would look at them, but I don't. So I just look at us. I think that being able to see gilts probably would have been really useful over the last month, but... That only has like 2/4 of bonds. Oh, it's super limited then, huh? ZN gets arbed against like 3.5 years, really? Okay. Here's what I want to know. If you're a market maker in the micro treasury yield futures and you wanted to like fully hedge yourself, what would you trade against? Where is it that you can get pure exposure to rates? Considering that, and yet it still trades about similar volume to ZB, it trades a lot. Like, I think the thing is that if like let's say that the tick size in ZB wasn't larger, right? I think that they have it set up larger for spreads and stuff like that. But if the tick size in ZB was like similar to the 10-year, then maybe it would be that there would be more activity overall in ZB. Right? The 10-year kind of hits that sweet spot of volatility and liquidity. So if you reduce the tick size, then people should be able to put up more volume. And maybe it would be interesting to see if maybe then it would come close to the 10-year volume. Okay, we're getting a little bit of a push here again. The volume still looks iffy though. It looks better in the 30-year. Might be one of those things where it just kind of chops around and frustrates us for the whole session, and then after we leave it skyrockets through here higher. It also kind of looks like that the 10-year is the one that's pushing it up, because look, the 10-year is up 2 ticks, 5 and 30 aren't. They have set it up larger because when they started the futures, they targeted the derivative tick size to about double of the underlying tick size. Yeah, I got you. SP was 1A when stocks traded in the one, yeah. Then the 16th. I'm not so sure if the decimalization of stocks was a good thing. Like when I look at stocks like Tesla and stuff, I'm like, why is this trading in cents? This is so retarded. And meanwhile, there's other stocks where 1 cent is way too wide. There might have the sellers may have made a big victory there at 01. And look, they're trying to hit the offer and it's not holding. Well, okay. You know what this is looking like to me, guys? This is looking like a day where it's not going anywhere for any real good reason, and that I had no reason to take trades, and I took 3 losers. Lost 35 bucks. Crap. Sucks. Sucks real bad. What sucks about it is that I never really got much favorable. I had one where I got 12 favorable ticks, but other than that, I've been under tick. And I had buys and sells too, by the way. So it's just like directly fighting me. So I think that I just don't have much edge in this current environment. I guess we could have had reasons to believe that they might not be able to get above the 03 and everything. It's just like, now what are they gonna do? Are they actually gonna like sell? I don't know. This is actually the low end of this range, isn't it? I'm tempted. I could take another one, but I'm kind of feeling like quitting. Yeah, it kind of makes me feel sad to say that, because like I still want to like come and make it back, but I'm not sure I understand what it's doing here today, and I don't know if there's really much rhyme or reason to it. I think that I've gotten, you know, for a while there, I was like only trading like major moves and stuff. And I came in today knowing that we weren't going to be in that kind of action, but still thinking that we are going to be able to get some trends and stuff. And it just did not come through that way, did it? And especially if I'm taking both buys and sells, that kind of says to me that I don't really have a very good predictor of order flow. I was kind of part of the buying was thinking that the 6J might support us, selling kind of thinking that the UK is still having an issue. But does the action really show us something happening? I don't think it does. So I have to, I think it's better for me to just quit. I guess I can try and figure out this inverse thing. Pull up Visual Studio here and fix that so that we can know exactly where they're intervening at. The 30-year gilt got auctioned at 4.4%. What? So it's like 40 basis points above everybody else? Okay. Debug, attach to process. Look, it's coming back. This is another thing is that like I usually just like puke because I haven't had to do it very often, but I'm like on a 10 trade losing streak now. So and in most of these I could have waited for it to come back. 4.4 yielded when Iceland defaulted? Really? Oh, I don't remember that. Like I vaguely remember that, but like I know what you're talking about. Unable to evaluate expression. What? Yeah, it must have been really early on. I just crashed Ninja Trader. I'm trying to debug it. Shit. I really come back to this thing where like when it's like random action, you would think that I should at least, you know, be able to get lucky some of the time and it should be like a wash. But that's almost never the way that it turns out for me. It's always just like I just get diced apart. And I can't help but feel like that the market specifically trades against me when that happens. Because even if I try and start doing random entries, not that I was doing that today, but there have been times where I'm like, okay, I'm just going to take a random entry and it goes against me every time. I guess you don't have a big enough data set to be able to see it, but it sure feels like it's trading against you and that there's a good reason to just not trade when there's a whole lot of opportunity. Bots are watching you and targeting you. It could be because I think today I was kind of with the crowd overall. I think overall I've been going with the crowd. So it could have something to do with that. Okay, so why? That's a weird. It's gonna crash again, isn't it? That's weird. Maybe you need one more trade. No. No reason for me to go ham today. $40 is enough to lose in one day. Technically, I'm willing to lose up to like 75, but okay, so I'm going to try like closing the workspace here and everything. I may be having memory problems. Hmm. Nope. So like I'm gonna close Visual Studio to give me some room here. Okay. Let's try this again, eh? You need to have at least 30 trades every day so that your sample size. So can I vent about something? So yesterday, you know, because I forget who it was, but somebody said, well, here's a recommendation, you know, you need to talk more about the order flow. That would be more interesting. And it's like, well, yeah, but that's not like what's going to help you the most, right? Well, so I thought about that and I was like, well, let's go and look at what some of the other streams are doing, because I've never like sat down and watched like a whole stream. So like let's just go watch somebody else, see what happens, you know? And so I go to find, you know, who's stream, the top streamer in our space, and I can't find it. So like they have like an editor now, and they make like a synopsis of what their trading day was, I guess, and like the full stream is removed. So it used to be like mine where all of the full streams go into a playlist, and it's not like that anymore. Like, are you effing kidding me? So and then the other thing was that like they had a big loss on Friday. Like they lost like 1,100 or something like that. And they like on the thumbnails, it's like how I made $500 day trading today. How I made, you know, past 2 days, how I made $500 day trading, right? And then the last Thursday or Friday or whenever it was, you know, market's volatile because of CPI. So the day that they lost, they didn't put the number in it. Are you effing kidding me? Like, isn't that a load of bullshit? Am I the only one that like that really bothers? Oh man, it's just, I feel like it's kind of dishonest, to be honest, you know? Like, I don't think they're doing anything like that they could get in trouble with the law for or anything, but I just feel like you're baiting your audience, and it's not moral to bait your audience when we're talking about something that is like, you know, their money. Oh my gosh, it's doing it again. Copy details. So if I copy the details, will it? Execution engine exception thrown. And then it crashes again. This is weird. Okay, I'm gonna close NinjaTrader again and then reopen it. I'm not sure get a lot of warnings in Visual Studio now. That's good. It also bothers me when they do that, but at the end of it all, they're all just pikers. Yeah. Well, like, so like I did that. I was like, oh, maybe we get some ideas here from doing this, right? And then I go and I see that and I'm like, nah, you know what? Screw you, YouTube. Screw you, YouTube. If that's the way, like, I've never really cared about the views that much. Okay. But now, like, I really just straight up don't care at all. If that's the way that, if that's, you know, what the top people in the space get away with, then I don't want to be at the top of that pyramid. Okay. I think what I'm gonna do is I'm gonna close Visual Studio here, open up the editor, open up my indicator. Build. Oh, I don't have debug mode specified. That might do it. Debug mode. Okay. Build. Okay. Now I will open Visual Studio 2019. Guess maybe it's time to get a new version of Visual Studio. I'll let Visual Studio go on here for a little bit before. So now it's hanging out down at the bottom here again, but this is kind of the spot that they haven't been able to get through, isn't it? So that's the other thing, is I was looking for breakouts both ways and it didn't break out. Okay. Attach to process. NinjaTrader. Attach. Still does it. What's wrong? I broke something. What did I break? Exception of type execution engine exception was thrown. Hmm. This is really weird. That Ninja Trader would just all of the sudden start having problems with this. I need to debug. Feel so demotivated today now. Like, I wasn't feeling very motivated yesterday anyways. And now to take another losing day today, full loser day today, and then I try to program some stuff and the programming's not working. That kind of pisses me off. I think that my next step would be to restart the computer, but I'm not going to do that while I'm streaming. So I guess afterwards I'll try restarting and seeing if that's what's doing it. I have been like doing various programming with like Rust and so forth that could be, who knows, could create some weirdness. Okay. Well, while I was doing all that, the treasury hasn't moved all that much. Well, good thing is today there is volume unlike yesterday. Yeah, there definitely has been volume, hasn't there? So I'm a little confused as to why we didn't get a trend, but it seems like there would have been plenty of reasons for it to do something. But no, they just decided to screw me over instead. It's okay. It's okay. I think part of my thing going on right now is like, I finished the book that I had been reading, which I really just kind of plowed through it. I wasn't like it wasn't a good book, but it just wasn't directly relevant to what I was doing at that moment. I think that'll be good information later on. I got some other books to read, but I've just kind of been like, meh. And like, I haven't had anything new for a while, you know? So like, I did really well for a long while with the trading. And it was, I think, largely just because the treasury market was moving. And now we come back into this kind of action. And it's just, yuck. Right. And like, the thing is that what we're getting right now is kind of more classic treasuries, right? It's kind of more classic treasuries. So I probably shouldn't be trading it, but like, if that's the way it is, like, doesn't make much sense for me to be trading it, right? Won't be trading very much. That's the way it's going to be. And so I'm a little bit demotivated from all of that. And then like going on to videos, like I wanted to make a video last weekend, and I didn't know which one I was going to do, but then that ended up not working out anyways. And so I'll try and make one next week, but I still don't know what I'm going to do. It really has been the case. I still need to make a macro video, but on that one, I don't feel like I really have like a super good video. And I don't think that it will be like really well viewed, you know? So I kind of feel like I'm at a dead end again. Like, it made really big progress, but it's still just like, I want to come in here and like smack him out of the park. And I don't think that that's going to happen. It's just a little bit too iffy. And if we want the stream, but that's the thing. Like, I think that if you want the stream to be popular, that's what we'd have to be doing, is we'd have to be coming in here and saying, look, we made $2,000 every day. Which is, I'm not going to trade that heavy unless I really make like $100,000 to blow on it or something like that. I don't think it's going to happen. So I'm kind of giving up on the stream growing. Like, we got our thing. And I think that's fine, and we can just be happy with that. But as to what we do about our trading here, do I just blow it off as like, oh, it was a bad day and tomorrow will be better? I think it's worse than that, because we will have to be able to deal with this. Like, the issue is, otherwise you might not even get a trade a week, right? Talk about the different theories of money mechanics, like modern monetary theory and the Chicago School, and how this affects markets. Well, so modern monetary theory is a bunch of nonsense. They took a few things that are maybe kind of true and turned it into this political theory of managing money that is just absolutely insane, right? Really what it comes down to is Keynesian. Everybody's a Keynesian. Like, it's just indisputable at this point that orders move markets. You put money into the markets, that will boost the markets, and that it has a positive effect on the economy. Right? It's just undeniable at this point. But we're still at the issue of, like, what do you do when you have inflation? What do you do when we're in a different environment and inflation is high? And it seems like that we had figured that out in the 80s, but the market's not like doing it, you know? They're still having problems. And so I think that the issue is that you need to have supply side stimulus too, which we didn't have this time around. You need to have supply side stimulus too. And I think that was kind of like the Chicago School. That was kind of the school of like, sorry, my mind going blank on names and stuff, but you know, those guys in the 80s, but it's too political. Like, there's just too much incentive for politicians to spend money and, you know, try and just blow off the inflation when it happens. You seem to know a lot of people. Why not have 1 or 2 minute segment with them? I don't know if I actually know a lot of people though, Zach. The thing is, to be honest, is that there's nobody else that I really trust to come in and talk to you guys. 'Cause that's kind of like a really negative view of the retail trading market, isn't it? But I think that almost everybody has like significant ideas about the way the markets work that are just total bullcrap. because hardly anybody, except for maybe Gary, Norton, everybody else is to one extent or another in the technical analysis game. You go through. Well, I just don't see how those things bring. So you see, so here's the problem, is that YouTube prioritizes watch time. So what's happening is there's like 12 of you that watch really regularly, and then everybody else that comes will click, see what's going on for a few minutes, and then get bored of it and leave. So the average watch time is not high enough, and so it's not pushing my stream out to very many viewers to get the high numbers, right? If the Google algorithm decided that I'm going to show all of the traders this now, then I would get 1,000 viewers too, right? But because I'm not putting on my thumbnail how much money I'm making, and I'm really conservative with my trading, so even when I'm doing really well, or even when I'm doing really badly, we're only talking about $150, right? So that doesn't capture people's attention to get the click-through rate and the watch time necessary for the stream to work like that, right? Which means that almost everything that we do for the stream has to come through either people seeing the regular YouTube videos and then wanting to come and watch the live stream, or some other forms of social media, TikTok, etc., right? I think that the stream is just too niche. We're trading. We're trading micro treasury futures right now, Arnold. So I think the stream is just too niche to ever really attract a super large audience. But I do feel like I should be at like 50 viewers and not 12 like we often are, right? We used to regularly hit 50, and now YouTube doesn't send them to us anymore. So it's kind of sad that, like, especially when it comes to like our YouTube videos, because we have some of the straight up best information about trading that you can find anywhere on the internet. No question about it. Most people are trading off of total nonsense that means absolutely nothing. And we actually have some empirical data information about the way the markets behave that's really useful. This doesn't necessarily make you money directly, but it's still really useful information. It's about the best information that you're ever going to pull out of the market empirically. And I think that those are really well done videos. But and they do okay. I mean, they do well. I do well. I think those videos do well, relatively speaking, but I feel like that it could be so much more. I feel like it should be so much more. And I'm kind of getting tired of putting a lot of time and effort into the YouTube and not getting a whole lot of reward out of it. Is your teaching applicable to Forex? No, because you probably shouldn't trade Forex. So first of all, in Forex, you can't see the market liquidity, so you can't really even judge what the current conditions are. And second of all, when moves happen in Forex, most of the time, the thing that's driving it is information that you just have no visibility into. It's like some bank is moving money overseas to do some transaction or something like that. Like that's very often what it is. And so when you get these big moves, they're random. They come out of nowhere, and like there's all these people in government that are in the know and you're not. And so I don't think that the Forex world is a very good way to trade. Yeah. Put neon signs behind yourself, 1,000% profit every day, day trader, millionaire, government. Yep, that's what you have to do. I'm not going to do it. I refuse to do this bullshit. where you put these big numbers on there, and then when you lose money, you just kind of memory hole it. Like, it was one thing when people were like blowing their accounts and then they were just kind of like really quiet about it, you know what I mean? But now that it's like anytime that you take a loss, that just doesn't happen to be in the title, and people can't even go back and like watch the full video. That's just so low. I think you mean, what do you recommend a beginner trade? Open a demo account and have been trading paper money? Where did you open it out at? So like, I think that if you want to trade futures, go and open a small account. Like, you only need like technically you only need $500, but I would probably start with more like $1,500 and come and trade micro treasuries, which is what I'm doing with one contract. The reason I'm doing it is because that's kind of what I recommend for beginners. And that's like the minimum amount of risk that you can really take. Oh, Jeff. Yeah, MT4. I really don't like it. MetaTrader. Yeah, so the issue with trading futures, like with what I do, is that there's a little bit of like upfront investment in tools that you usually need to do. So I use Jigsaw. I'm a Jigsaw affiliate. There is a link in the video description that gets you a small discount. But it's like $500, and then you're paying like $50 a month for the live trade license to execute with Jigsaw. And then on the other side, you have to pay for the data fees for the CME to get the, all of this information that we're seeing. And so, so you're paying like $100 a month essentially, right? To trade. That's what it comes down to if you do a combine too, but you're actually trading your own account. So, to do futures, yeah, it takes a little bit of money up front. But like the real question is like, why do you want to trade? That I think really dictates a large degree of like what you should actually do, right? You have a step-by-step? No, less. So, when I was a scout, we would go hiking all the time. We did lots of big long hikes, right? But then we would start doing orienteering. So what's orienteering? Orienteering is like you have a map and a compass, and you have a place that you want to get to, and you just have to go and get to the place, and you're like bushwhacking, right? There's no trail anymore, okay? So how do you do that? Is there a simple step-by-step system? There's not. There's not some little trail that you can just kind of set and follow and find the thing. Because really what we're doing is we're sitting out here in the wilderness, and then opportunities are going to pop up over here and over here, and we want to go and we want to go and run to those opportunities and get to them in time, right? How do we do that? Well, we're going to have to understand how to read the map. We're going to have to be able to understand how to use the compass, and we're going to have to be in shape at walking and have gear to get around and stuff like that, right? It's not a simple thing. So the market is very statistically efficient and not very informationally efficient. That means that any kind of trading system that is based on like a bunch of step-by-step rules per se, like set entry conditions that I could like potentially program, is extremely unlikely to work, right? You have to be able to come in, look at the day, see what are the possible predictors of order flow that day. What are the things that are moving the markets that might predict which way we're going to go, right? And then you need to be able to come in and read the order flow to see what the current conditions are, to see if, you can actually find a good spot to get in, and that there's actually a possibility for the liquidity to move the way that you want. And then you're going to have to be able to look at the correlated assets to help you confirm that the thing driving markets is really what you think. So I should be able to judge which direction these various instruments are going in order to verify what I'm doing. And then I need to be able to hold a certain amount of risk. So I don't want to, potentially risk my whole account on a trade or whatever. I want to be able to, keep it to like a $10 loss or whatever it is going to be, is your risk management part, right? These are the step-by-step instructions about how to do day trading, right? Well, they're not step-by-step instructions. They're kind of more like a set of general skills that you need to have to be able to trade, right? Yeah, see, I think it's fun, and I like to start making $1,000 a month and eventually do it full-time. That's why I started. Also want more time freedom. And so if that's what you're looking for, like, go into programming. So trading is fun. Can you make money off of it? Yeah, but like, if you want to consistently make $1,000 a month, so it's actually really hard. Frankly, it's really hard to just consistently make any money a month. It's really hard to come in and like even just break even after a year. After a year, break even, you're really good. Most likely outcome is you blow the account, right? And many of these traders that you see out there, because you're thinking, well, that can't be true because I've seen there's like all these people that do it for a living and stuff, right? Well, most of these people that claim to be doing that, they have other sources of income, and what they're really doing is they're taking on risk. So it seems like they're making money, and then one day they'll just blow the whole account. So that's kind of what we were complaining about, was there are some other creators that regularly blow accounts, essentially. I mean, I blow accounts too, right? But it's been a while. It takes me about a year to get to that point. Well, so the most basic stuff that I have is my 4-part series on order flow, the video that we've got. So the reality of it is that what we're doing is really sophisticated, and if you're not the kind of person that can sit down and like sit and watch the markets together with me for a week, you're probably not gonna make it, right? Probably not gonna make it. Not trying to discourage. So I'm actually have made this PDF. So can I read? Oh no, it's almost time for me to go. I think I can go through this really quickly. Okay. Trading is one of the most difficult ventures one can undertake. I do not point this out to scare you out of trading. If you're reading this document, you have most likely already discovered this fact for yourself the long way. Finding temporary success only to falter and find yourself back at square one seems to be part of every trader's journey. Perhaps it is even a necessary step, not because every trader needs to taste failure, but because every trader needs to ask why. Why is trading so hard? At first glance, it seems to make no sense. For any given trade, there are really only two options. Either you make money or you lose money, which makes it all the more painful when you find yourself blowing account after account. We traders tend to be pretty stubborn people, and it usually takes a few failures before we humble ourselves and ask the pivotal why question. It is only by asking why that we can discover the true nature of markets that will light the way to a better path forward. So, why are markets so hard? Because markets are competitive. This might seem like a trivial answer at first, but you'll grow to appreciate how profound this statement really is the deeper down the rabbit hole you go. Makes sense? Then I go on to explain how the market is more statistically efficient than it is informationally efficient. And we get into the 5 essential parts of a good strategy. Okay. Well, we did push a little bit lower here and then snapped back up to 1100 even. This really is really starting to look like market maker shenanigans to me now. And I feel dumb for trying to trade it. I feel dumb for trying to trade it and not getting anything out of it. That sucks, but maybe tomorrow we might be a little bit more, well, maybe tomorrow we might be hands off too. Might be a few days before I take another live trade. Just until we're sure we're in a period where the market is really going to move for us. You know what I mean? Making it a bit more modular. Yeah, but I mean, the issue is that like we have a lot of videos that do all that sort of stuff. We're gonna come in here and trade, right? You got to start somewhere, and that's just watching it and seeing what's going on, right? So today, you notice today that we noted a lot of things about the liquidity, and I did take trades, but ultimately, like, we never had anything come over the news squawk or anything like really significant end up coming through for us. So we had some potential predictors of order flow, and they just never happened, right? But like, that's kind of the way it goes, and you just have to sit, like, that's trading, is you need lots of screen time. And what I'm doing here is what's going to help you the most. It really is. This is what I believe will help you the most. And if that is not what works best for the YouTube algorithm, then screw the YouTube algorithm, right? Okay, guys, I gotta get going. I will see you tomorrow. In the meantime, stay excellent, friends.